I want you to imagine a word so powerful that it can shut down the logical part of your brain in less than a second. It is not a command, and it is not a threat. It is the word free. We are wired to think that if something costs $0, it has zero risk. But today I am going to prove to you that free is actually the most expensive price tag in the modern world. And the story of this deception starts in a place you might not expect. In the mid-19th century, in the dusty and rowdy saloons of New Orleans and Chicago, a new marketing invention appeared that would change the world of commerce forever. You could walk in having not eaten all day and see a sign that felt like a miracle. Free lunch. It was not just scraps. We are talking roast beef and ham and cheese and salty pretzels, or maybe even some pickled eggs. All of it was completely free as long as you bought a single drink. It sounded like the deal of a lifetime, but there was a catch. It was a brilliant and biological catch. The food was intentionally loaded with salt. The more you ate of this free lunch, the thirstier you became. You would finish a 5-cent beer in seconds and order another and another. By the time you walked out, you had spent 3 times what a normal meal would have cost, all while thinking you got a bargain. The saloon owners knew a secret that modern tech giants have perfected. There is no such thing as a free lunch. The cost is simply hidden or shifted or delayed. Welcome back to the channel. Today, we are going to expose the modern version of that salty ham. We live in an economy of free apps and free shipping and free trading and free content. But I want to argue that this free economy is actually one of the biggest threats to your ability to build long-term wealth. We are going to look at the history and the psychology and the math behind why free is often the most expensive price you can pay. So why do we fall for it? Why does the word free turn off our rational brains? Economists call this the zero price effect. In a normal transaction, humans are wired for loss aversion. When you pull out your wallet to pay $5 for a sandwich, your brain registers a tiny bit of pain. You weigh the value of the sandwich against the pain of losing the money. But when something is free, that pain disappears completely. There is zero risk of loss. Suddenly, the product does not just look like a good deal. It looks irrationally valuable. We will wait in line for an hour to get a free scoop of ice cream that costs $3. We spend an hour of our time, which is non-refundable, to save a trivial amount of money. The free label hacks our dopamine receptors, giving us a rush of reward before we've even considered the hidden costs. And today, those hidden costs are not just a few extra beers. They are draining your wealth in 3 specific ways. The first and most obvious is the cost of your data and attention. This is the model used by social media and search engines. You know, the saying, if you are not paying for the product, you are the product. But let us go deeper than that. These platforms are not just passive billboards. They are active behavioral modification empires. When you use a free social media app, you are paying with your data, which is then used to build a profile of your psychological triggers. They know what makes you insecure, and they know what makes you impulsive, and they know exactly when you are most likely to spend money. The cost here is not just the annoyance of ads. The cost is the impulse purchase you made at 11 at night because an algorithm knew you were tired and vulnerable. The cost is the lifestyle inflation that comes from constantly seeing curated and expensive lives on your feed. You are trading your privacy for entertainment, but the result is often a subtle and continuous drain on your bank account driven by a manufactured desire. The second hidden cost is in the financial services industry itself, specifically with free trading apps. A few years ago, we saw a revolution. Commission fees dropped to 0. It seemed like a massive win for the retail investor. But remember, the saloon? If they are not charging you a commission, how are they keeping the lights on? Many of these apps make money through something called payment for order flow. They sell your trade data to massive market makers who execute the trade. Often this means you are not getting the absolute best price on the stock. You might be paying a penny or two more per share than you would have otherwise. It is the salty pretzel of the stock market. But the bigger cost of free trading is psychological. When trading costs $10 per trade, you thought twice before buying or selling. You had to be sure. It acted as a friction that encouraged long-term thinking. When trading is free and the app shoots confetti across the screen when you buy it, gamifies your wealth. It encourages over trading, and historically, the more frequently a retail investor trades, the lower their returns. The free structure removes the friction that used to protect you from your own worst impulses. The third cost is perhaps the most dangerous because it feels like a helper. Buy now, pay later. You see these options everywhere now. Split your payment into 4 easy chunks. No interest. Free financing. It sounds like a great tool for cash flow. But again, let us look at the psychology. These services reduce The pain of paying to almost zero. If you have to pay $200 for a jacket today, you might say no. But if you have to pay $50 today, that feels like free. It feels manageable. This causes the average consumer to increase their basket size, effectively spending more money simply because the immediate consequence has been removed. You are not paying interest, but you are paying in behavioral debt. You are borrowing from your future self to satisfy a present want solely because the barrier to entry was lowered to zero. And if you miss a payment, the late fees hit, and suddenly that free service becomes incredibly expensive. So if free services cost us our privacy and encourage poor investing habits and inflate our spending, what is the solution? Do we go live in the woods? No. But we have to redefine what we consider wealth. Wealth is not just a number in your bank account. Wealth is your time. Wealth is your focus. Wealth is your agency, which is your ability to make choices that are not manipulated by an algorithm or a marketing tactic. When you rely entirely on free services, you are often paying with your time and focus, which are assets that are far more valuable than a $5 monthly subscription fee. Sometimes, the smartest financial move you can make is to actually pay for a service. When you pay for a premium ad-free version of a tool, or when you pay a fee for a financial advisor or a transparent broker, you are realigning the incentives. You become the customer again and not the product. You introduce good friction back into your life. You stop being the thirsty patron eating salty pretzels and start being the owner of your own decisions. Here's my challenge to you for this week. Do a price tag audit. Look at the free apps you use the most. Ask yourself a few hard questions. What is the real cost here? Is this free trading app causing me to gamble instead of invest? Is this free social media app causing me to want things I do not need? Is this free news site costing me my peace of mind with clickbait? You might find that spending a little bit of money to eliminate ads or protect your data or get better execution is actually the cheapest option in the long run. Do not let the zero price effect blind you. The most expensive things in life often come with a price tag of zero. Protect your attention and guard your data. And remember one thing. In the saloon of the modern economy, always check who is paying for lunch. If you found this helpful, I would appreciate you hitting the like button, as it is one of the few things in life that is actually free and helps the channel immensely. Thanks for watching, and I will see you in the next one.